throw them, that maybe this won't be sort of the washout that some people thought it was going to be a few days ago.
Tim, maybe not quadrupling, but you certainly are seeing real yields rise and continue to remain positive. And I think this is interesting, even in the face of sort of the big rally we have underway within the nominal space. And I think what's interesting when we think about the composition of a nominal 10-year yield, it's real plus the inflation expectations. And as Romain was pointing out, a lot of the inflation expectations are steady to maybe rolling over, but all the movement then lately has really been coming from the move in real yields, and that is sort of the tightening financial conditions, the market maybe doing some of the work for Jay Powell himself.
Well, what about when it comes to the odds of a recession in the next year or two? Right. We've heard a lot of experts weigh in on this. Let's go to Bill Dudley now, former Federal Reserve Bank of New York president, also our colleague at Bloomberg Opinion, columnist and senior advisor to Bloomberg Economics. He spoke to our colleagues this morning on Bloomberg Surveillance. He said that the U.S. economy is heading for a hard landing. Check out what he had to say.
You really get a deep downturn when things in the financial system break and the ability to supply credit to people becomes impaired. I don't expect that to happen this time. So I would expect a mild recession like 1990 or 2001, not a deep recession like 73, 74, or of course the great financial crisis.
Dudley also writing in a column for Bloomberg Opinion that it's inevitable within the next 12 to 18 months that the economy goes into recession, Ed.
Yeah, well, Fed Chair Powell also kind of giving Dudley the point that he's right. You know, there was a key line in that column that he sees the Fed being committed, relentlessly committed to price stability. And what you heard Chair Powell say was there's a balance of risks. There is a risk of a hard landing, but the risk of present inflation in the economy is still there. And it would be a failing of the Fed if they didn't address it.
And you know, just to go back to Dudley's point and the point, too, that Taylor was making, too, about when you look at real yields here, there's also this consensus, and you heard this from Dudley in the interview, not necessarily in the column, and you've heard this from a couple of other market strategists out there, the idea that investors are now starting to pay much more attention to the real returns, I guess, with regards to whether it's in the equity market or other risk assets, and that's becoming, yes, Taylor?
What did we learn today?
What have we learned? I don't know.
Not Tina.
I didn't know this was a lesson. What's happening?
Well, at the top of the hour, Kevin Nicholson taught us not Tina, and my mind is blanking, Katie. Patty.
Yeah. Pay attention to income.
To income.
That fixed income actually...
Sorry to cut you off, Romain.
Maybe it offers income now. Bonds, they actually pay out something now.
Yeah, and it's become, look, guys, I mean, it's becoming a big issue. And like I said, I think you've already seen it at the consumer level when it starts to trickle up to the investor level, where they start sort of moving away from nominal measurements to some of those real measurements. Then what does that mean for a market right now that's still holding at, what, 3,800, a little bit under that? Do we go further higher or do we go lower?
Also a good reminder of just the politics associated with inflation today, because this was, make no mistake, a hearing obviously in front of lawmakers, but it was politics after politics after politics, with Democrats and Republicans, Taylor, just hammering the Fed chair about their constituents' feelings when it comes to inflation.
Yeah, we're certainly hearing a lot of the political aspects of this, with the president blaming Putin and saying we have to take responsibility to hold him accountable. But if you're just trying to fill up your tank of gas to get to the car, you know, to work, and trying to go to the grocery store to fill up your food for the family, it's hard to make us pay more to, you know, punish someone else across the world. I don't want to get into politics, but I think that narrative has shown just how tricky it can be when you have a lot of Americans saying we just need to fill up our car.
Gas prices down for over the last week every single day, but still close to $5 a gallon nationally. That is going to do it for our cross-platform coverage. We're going to be back together again live on TV, radio, and on YouTube at 4 p.m. for our Beyond the Bell coverage when we take you through today's market close.
This is Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Ed Ludlow. We're live in New York and San Francisco. Ed's joining from the 960 studio in California. I'm here at the Bloomberg Interactive Broker Studio. Ed, I want to follow up with what we were talking about just now in our cross-platform coverage with our colleagues from radio, from TV. And I'm just curious, you know, about the political element here, because we have midterm elections coming up. Fed Chair Jay Powell was recently reappointed, so he's there to stay. But there are serious political implications for Democrats when it comes to the election in November, because that number one issue, as poll after poll shows, is the economy. I'm having a hard time hearing Ed. I don't know if those in the control room are hearing Ed now. Ed, they're going to work on getting your mic back from the TV team, and we're going to get back to you in just a minute. In the meantime, we are going to check on the markets as we do each and every 15 minutes. The Dow higher by 0.4%, the S&P 500 higher now by 0.5 percentage point. The NASDAQ is up by 0.6%. The S&P 500 off of those earlier highs that we saw in the day. But if we take a deeper dive into the S&P 500, we do see that by far the worst performing sector today is the energy sector, as prices for oil come down over concerns of what's happening when it comes to the global economy and whether or not we are going to see a global slowdown. Let's now head to Washington, D.C. for check latest world and national news. For that, we go to Nancy Lyons in Washington, D.C. Hey there, Nance.
Thanks, Tim. Fed Chairman Jerome Powell says the central bank is determined to fight inflation with higher interest rates. Speaking before the Senate Banking Committee today, he says a recession is a possibility.
It's not our intended outcome at all, but it's certainly a possibility. And frankly, the events of the last few months, around the world have made it more difficult for us to achieve what we want, which is 2% inflation and still a strong labor market.
Chairman Powell heard criticism from both sides of the aisle. Republican Richard Shelby says the Fed has failed the American people. Democrat Elizabeth Warren warned Powell not to drive the economy off a cliff. President Biden today is calling on Congress to suspend the gas tax for the next 3 months. He's also calling on states to do the same, and he's pleading with oil companies to increase refining. He says now is not the time for those companies to be profiteering. It's unclear if Congress will take any action on the gas tax. Failures during the pandemic have revealed widening cracks in the U.S. public health system.
A new report from a bipartisan group of health experts calls for more public health representation at the top levels of the administration, reliable funding for state and local health departments, and a new undersecretary position in the Department of Health and Human Services. The report from the Commonwealth Fund Commission on a National Public Health System, chaired by former FDA head Margaret Hamburg, says the country needs better sharing of critical health data and targeted efforts to combat health misinformation. In Washington, I'm Amy Morris, Bloomberg Radio.
The Biden administration says it is providing logistical support to import the equivalent of about 16 million 8-ounce baby formula bottles from Mexico. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenovec in New York, Ed Ludlow in the Bloomberg 960 studio in San Francisco. Ed, among the most read on the Bloomberg terminal is an article by Vildana Hyrick and David Pan. It's about the mystery surrounding a $500 million outflow from a Bitcoin ETF.
Right, so this is North America's first Bitcoin ETF, which is worrying for a market that wants to grow, but 500 million last week, a record one day of outflows, but where and why? Mystery.
Yeah, we're talking about the Purpose Bitcoin ETF. The ticker, if you want to check it out, is BTCC. The withdrawals from it equaled about 24,510 Bitcoin. Wow, that's around 51% of its assets under management on Friday. This is according to data compiled by Bloomberg and analysts.
And the whole point is that even the COO of Purpose Investments, the operator, couldn't give a reason. They didn't have visibility into the trades because of how the ETF is structured, which is disconcerting, but also that's one of the points of ETF, right? Democratizing access to markets. But still, this is what people have been calling for, Bitcoin ETFs, especially here in the US where we don't have a pure play one yet.
Right. And just yesterday, as Katie Greifeld pointed out, when she was co-anchoring, she wrote a story, and it was among the most read, was the launch of a short Bitcoin ETF. Let's talk a little bit about what you were talking about when it comes to futures and spot ETFs, because Bitcoin futures and spot ETFs, they've been popular among investors that are not willing to hold Bitcoin, but they want to gain exposure in their portfolio, Ed. The funds have been hit hard as of late amid the slide in the price of crypto. Bitcoin ETPs, that's exchange-traded products, they've seen net outflows of 18,315 coins as of June 21st. That's according to Arcane Crypto. Yeah, it's by far the most severe redemption we've seen in the relatively short-lived BTF ETF history. This is what Arcane Crypto said. Europe has had several crypto market tracking products that functioned like an ETF before this purpose fund was launched. The SEC has repeatedly rejected requests, as Ed mentioned, for a physically backed ETF, citing price volatility and the risk of market manipulation. You're listening to Bloomberg Radio. This is Bloomberg.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got the Dow, the S&P, NASDAQ all advancing. 43 minutes to go ahead of the closing bell. And let's head right over to the first word breaking news desk for today's afternoon call. And here is Bailey Lipschultz.
Good afternoon, Charlie. As you said, stocks are rising after Fed Chair Powell reiterated a commitment to curb inflation. The Dow is up 110 points, S&P rises 20, with the Nasdaq higher by 65 points. The U.S. 10-year yield is at 3.15%, and small caps are little changed. 8 of the 11 main S&P sectors are trading higher, led by gains in real estate and healthcare, while energy and materials are the worst performers. Nasdaq Biotechs rise 80 points, transports fall 100, semis are off 5 points, while the VIX is lower by 4%. Leaders in the Dow, United Health, J&J, and Procter & Gamble, while Dow, Inc., Chevron, and Caterpillar are the worst performers. JP Morgan is laying off hundreds of home lending employees after the surge in mortgage rates. Altria sank after a report the FDA is preparing to order Juul to take its e-cigarettes off the U.S. market, and Lazy Boy jumped the most since November 2020 after record sales. In deal news, Kohl's tumbled 9% on a report that Franchise Group may lower its takeover bid. Wrapping things up, look for earnings from KB Homes after the bell. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. Charlie?
Okay, we thank you very much, Bailey Lipschultz, and to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, it's a real treat this afternoon because all the way from Florida, we've got with us in the Bloomberg Interactive Broker Studio is Mike McGlone. You know I'm a senior commodity strategist for Bloomberg Intelligence. He not only covers crypto, but he also covers other commodities, including oil, which I'm sure to pick his brain about in just a minute. Mike, good to have you with us. You look tan, by the way. How are you?
Sorry about that. And oftentimes I have to kind of hide from the sun, but it's such an outdoor culture.
I know.
But
you're just enjoying life in Miami. You know what's not enjoying life is Bitcoin of late. Falling significantly.
Hard pivot.
I know. It was a hard pivot. I had to go there, though.
Yeah.
And people who've been holding Bitcoin, it fell below 18,000 for the first time since 2020 over the weekend. What say you about this decline?
Bitcoin's a cog in the wheel of the ebbing tide of the macroeconomic. I mean, it sounds complicated. It's very simple. So Bitcoin's dropped. It's down 75% from its peak. That's normal for Bitcoin. It's just a normal correction. The thing is, you look at crude oil, it's dropped over 75% 3 times since the peak in 2008 within a bear market. Bitcoin's dropped like this within a bull market. So I look at 2H this year. Let's look at today. Crude oil's down 3%. Bitcoin's down less than that. Next half of this year, to me, the much more vulnerable of the two is crude oil. If it just mean reverts, which it typically has, the key thing to remember about crude oil, just a few months ago, it stretched the most ever above its 100-week moving average. Now, just to go back there, it's normal for crude oil. For Bitcoin, it's normal for corrections within an enduring bull market. I think that's going to resume in the second half of next year. But it's also within the macro. Look what the stock market's done this year. Look what the Fed's doing. The Fed's tightening more. Crude oil is going up, which is pushing everything lower.
Mike, I want to go back to last week when we had the Fed meeting. We had Scott Minerd of Guggenheim on the show, and he made the point that you did, which is that Bitcoin had this drop in a bull market, and it was almost a leading indicator, right, of what we saw in other risk assets. And he made the argument that you won't see a bottom in equities until we see a bottom for Bitcoin. So what is your bottom for Bitcoin call?
That voice in the ether you hear, by the way, is none other than Ed Ludlow in our 960 studio.
Man.
Yeah, well, hello, Ed. I thought you were a virtual bot. No, I don't disagree with Scott, and that's the key point of what he said is Bitcoin is now one of the world's most significant leading indicators. It shows how profound this is. It trades 24/7. It's the most fluid trading vehicle ever. And I come from the trading pits. You know, they'd shut down. They have problems with the closes. Bitcoin's no one else's liability, and it's decentralized. So that's such a unique part of it. And it's also becoming global digital collateral. It's part of that rapidly advancing technology. So I think what's happening here is Bitcoin's going to come out ahead. It's just going to take a while. It's the highest beta. One of the key signals for that happening is once we stay taking out some of that Fed tightening, bond market should recover, gold should recover, and Bitcoin will come in there. But the key thing to do that, the stock market still probably needs to climb more, although right now it's a little bit oversold. And the Fed has said, the Fed said, we're tightening more despite this, what is it, almost a 30% drawdown in the NASDAQ.
Yeah, that's absolutely right. Mike, we like having you not just to talk about crypto, but also to talk about commodities and the greater market that you're seeing and what it's telling us about the economy. And a week ago, you were on our program, and you said that we would start to see a decline in the price of oil. And since you were on last week and said that, what has declined? The price of oil. Now, we have some analysts saying, okay, this decline is short-lived because as soon as China opens back up and increases demand, we're going to see the price go up. What do you make of the decline in oil prices that we're seeing, and what does that tell us about where things are going to go with the global economy?
Well, one thing I have to appreciate, Tim, I appreciate when I get a few things right, because the key thing about crude oil is I have to own my mistakes. I completely missed it until, of course, this invasion. But now that this has happened, what is crude oil doing? The fact that it's gone to such a high velocity rally, it's accelerating rate hikes from virtually every central bank that's hiking. The Fed at the beginning of the year was going 25, now it's going 75. So it's its own worst enemy, and it's not profound. Crude oil is more likely to go to 50 than 150. 50 is just the average cost of production in the U.S. It's like the 5-year average. 150 is in a guaranteed global recession. I think that's just starting. You're seeing like the Bloomberg Economics GDP indicator. It's dropping at a greater pace than it did in 2008. And it's potentially more enduring this time because back then the Fed was easing. Now they're tightening. Crude oil is accelerating that. So that's the key thing in there. And I look at the whole commodity space as much more vulnerable to significant deflation, reversion, and that's not profound. That's what it's been doing for most of history. And crude oil is actually one of the worst performing commodities. I'll be publishing on that tomorrow. It's basically the dud of commodities if you compare it to Bloomberg Commodity Index. And the last key spike, the high was 1990 versus commodities. A second bounce was 2008. Versus the broad Bloomberg Commodity Index, it's been trickling down, and they'll be on the terminal tomorrow. Right. And that's just another pump within an enduring bear market. Remember, crude oil is still, what, 30% below the all-time high? And what's Bitcoin been doing over that since 2008? Right. I mean, it's up.
Mike, we just have 30 seconds here, but I kind of feel like there's two competing currents, right? There's the supply story, tight market, and then there's the recession fears story where demand evaporates. Which one will win out, you know, in the near term right now for you? Just 30 seconds.
Enduring bull markets only happen from a demand pull standpoint. Supply shocks almost always accelerate enduring bear markets. This is a supply shock, and you're seeing the effects. I fully expect crude oil going towards $50 a barrel.
All right, there it is. Mike McGlone, he is Senior Commodity Strategist for Bloomberg Intelligence. He's with us in the Bloomberg Interactive Brokers studio, but normally you find him on the beach in Miami. I'm just kidding, Mike. I know you're working hard now that you're living down there. Really appreciate you taking the time. Ed Ludlow and Tim Stanivek, this is Bloomberg Business Week on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenovic and Ed Ludlow. We're live in New York and San Francisco on this Wednesday afternoon. Well, this morning, Federal Reserve Chair Jay Powell gave his most explicit acknowledgement to date that steep rate hikes could tip the U.S. economy into a recession, saying one is possible and calling a soft landing, quote, very challenging. We're going to dig into that with Steve Matthews, economics reporter for Bloomberg News, in just a few minutes. First, though, Charlie Pellet, less than a half hour to go to the market close. How's
Indeed, stocks still holding on to their gains. The Dow, the S&P, NASDAQ, all advancing right now. Off session highs. Do want to begin, though, with a developing story. The FDA investigating another infant death led a link to Abbott Formula. The FDA says the infant died in January. The agency was notified on June 10th. Stocks higher after Fed Chair Jay Powell reiterated his commitment to curb inflation and acknowledged the risk of recession, as some traders now expect the central bank to closely monitor the impact of its rate hikes on the economy. S&P holding on to a gain right now of 7 points, up 0.2%. The Dow up 49, up by 0.2%. NASDAQ up 14, a gain there of 0.1%. 10-year yield 3.15%. Spot gold up $5 the ounce, up 0.3%. 18.38 the ounce. And West Texas Intermediate crude falling 3.3% today. We've got West Texas Intermediate at 105.83 a barrel, down 3.69. Well, as for the economic backdrop and a recession call, Lisa Shallett is Chief Investment Officer for Wealth Management at Morgan Stanley.
I am in the camp that the price action we have seen thus far, this bear market, has probably discounted at least 2/3 to 7/8 of the way there to what we're guessing, and I use the word guessing, is going to be a shallow recession.
Morgan Stanley's Lisa Shallett. Traders are piling into shares of Revlon, driving its gains from a record low to 800% as individual investors look to strike a quick profit while ignoring the fundamentals of the bankrupt cosmetics giant. Today, Revlon shares are surging by 36.3%. Recapping 10-year yield 3.15%, S&P up 8, a gain of 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, Fed Chair Jay Powell earlier today wrapping up his testimony before the Senate Banking Committee. It's the first of 2 days of congressional hearings. He said that kind of gave his most explicit acknowledgement to date that steep rate hikes could tip the U.S. economy into recession, saying one is possible and calling it a soft landing very challenging. Very pleased to have with us Steve Matthews, economics reporter for Bloomberg News, live from our Atlanta bureau. Steve, really good to have you with us this afternoon. Did we learn anything new about the Fed's path to get inflation under control from Fed Chair Jay Powell earlier today?
We did not learn a whole lot that was new. The tone was very similar to the press conference after the FOMC meeting last week. The Fed watchers were out and about and parsing every word. In fact, you talked about it, Powell saying that it would be very challenging to avoid a recession and to have a soft landing. Last week he said it was challenging. This week he says it's very challenging. So it's like people were kind of reading in between that, okay, maybe the odds of a recession have gone up a little bit. He also talked about inflation, and he sounded obviously very hawkish in that they would do whatever is necessary to bring inflation under control. But last week in the monetary policy report that came out Friday, the Fed said it viewed the bringing inflation down as an unconditional mandate, and he did not use the word unconditional today. And some people read into that okay, maybe this was slightly less hawkish than expected. Although he basically said we're going to raise rates, we're going to continue to raise rates at an aggressive pace until we get to neutral, which is about 2.5% in their view. Neutral rate being neither expanding the economy, stimulating the economy, nor contracting it. And then we're going to probably move to a contractionary rate, but the pace of that and how high we go is going to be depending on the data.
Right. Steve, Ed Ludlow in San Francisco. We've got to give the context, right, that this was a congressional hearing and he got all sorts of questions about gas prices and the war in Ukraine. And he talked about the challenges that are outside of the Fed's control, namely the war in Ukraine, supply chain breakdown. What is it that the Fed is trying to communicate to lawmakers? What is it that the Fed can control?
The Fed can control demand overall, but as Powell said a number of times today, monetary policy is a blunt instrument. So it's like they can try to bring down overall demand, but when you got to ask questions by a senator from Kansas about the rural economy, and it's like, well, the Fed doesn't really have tools or very many tools to deal with the rural economy, and it doesn't have tools to deal with gas prices. And I believe it was Senator Warren from Massachusetts who asked, can you control gas prices? And he said, no, we don't have anything to do with the energy prices. So there's a realization that a lot of what's happening in the short term with inflation has nothing to do with the Fed, with food prices and energy prices and things that are related to supply chain difficulties and the war in Ukraine. And he acknowledged that very frankly. But at the same time, they can control the overall pace of demand, right, and that does have some influence over time on inflation.
Steve, we're getting so many comments about whether we're in a recession already, if there's going to be a recession the next 12 to 18 months. What does employment tell us about whether or not we're in a recession right now? You were tweeting about this last week, so I wanted to ask you about it because we're seeing unemployment still sub 4%, and we have about 1 minute left.
We have been getting employment reports around 400 to 500,000 every month this year. And employment is a key indicator in how the official National Bureau of Economic Research committee that decides whether or not what a slump is a recession or not, that's one of the key indicators they look at. And clearly, the employment market is still booming. There's no recession. And in fact, this was something Powell talked about today. He said he did not see a near-term risk of recession. I mean, he kind of laid out the possibility that over some period of time, there was a risk of recession. But in the near term, the economy is very strong, and employment is one of the areas where it's the strongest.
Steve Matthews, he's economics reporter for Bloomberg News. He joins us live from our Atlanta bureau. Also, check him out on Twitter. He tweets all the time about economics and what's going on in this world. Steve Matthews 12. You can follow him there on Twitter. Let's go from Atlanta and San Francisco to Washington, D.C., where we find Nancy Lyons for a check of the latest world and national news. Hey there, Nance.
Thanks, Tim. President Biden is asking Congress for a 3-month break from the federal gas tax, with prices now close to $5 a gallon nationwide. But some experts are warning the move could do more harm than good. We get more on that from Bloomberg's Nathan Hager.
A recent study from the University of Pennsylvania's Wharton School shows states that have suspended their fuel taxes have seen prices come back even higher than they would have if the tax had never gone away. That seems to be the case in Maryland. That state saw a price spike after its 1-month gas tax holiday in April. An analyst at Gas Buddy says cheaper pump prices drives up demand, and a gas tax pause could constrain supply even further at a time prices are already sky high. In Washington, I'm Nathan Hager, Bloomberg Radio.
The Senate Minority Leader is cheering the bipartisan gun safety bill that's on a fast track to passage by week's end. Speaking on the Senate floor today, Kentucky Republican Mitch McConnell called it a big step that will reduce gun violence.
Yesterday, the Senate took a big step toward an important bipartisan bill to prevent mass murders, make schools safer, and protect the Second Amendment rights of law-abiding citizens.
McConnell was one of 14 Republican senators who voted to advance the bill. German Chancellor Olaf Scholz says he wants to discuss the outlines of a Marshall Plan for Ukraine with the leaders of the group of 7 countries at their upcoming summit. Scholz hopes for a united front on long-term support for Ukraine when he hosts the annual G7 summit in Bavaria next week. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Thank you so much for that update, Nancy Lyons. Among the most read on the Bloomberg terminal, Ed Ludlow, joining us from San Francisco, I'm Tim Stenivek in New York City, is a story about authorities who are probing a Miami accident after a jetliner catches fire. Ed, I don't know if you saw on Twitter late last night the video of this accident making the rounds.
I saw the video. This is an unusual scenario where the plane is landing, and it bursts into flame because the landing gear collapses, and 126 people on board. We should state 3 people had minor injuries, taken to hospital, all was well. But just horrific scenes of social media videos, people fleeing the scene, running from the burning craft, and investigators on site today.
Okay, I'm going to use this as an opportunity for a public service announcement, because when I was watching one of these videos that was taken by somebody who was evacuating the plane, first of all, why are you taking a video when you're evacuating a plane that's on fire? Second of all, you could see this person had his or her wheelie bag with them. And what do they tell you when you're on an airplane?
Leave everything behind.
Leave everything. And you could see the way that this person was actually struggling to get down the emergency chute with his or her wheelie bag. And I'm thinking to myself,
such is human nature.
Oh, just leave it. It's just whatever's in your bag, and the plane is on fire.
You know, I'm not surprised that this is one of the most read stories, right? We're all flying more. The world is reopening. I'm a frequent flyer, and you read these and you put yourselves in the shoes of those people. What would you do in that moment? I would leave the bag. That bag's gone.
Leave the bag and not turn on the recorder on my phone, I think. This accident, Ed, it involved an old plane. It's an MD-80. These engines are in the rear of the plane. It was aircraft operating as Red Air Flight 203 from the Dominican Republic. This is what the FAA said in an emailed statement. Photos and video on social media showed flames and black smoke rising from the jet as it skidded to a halt. The fire was subsequently extinguished, and the 3 people who had mentioned were transported to area hospitals for treatment. This according to a tweet from the Miami-Dade Fire Rescue Department. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Those earlier gains have faded. The Dow, the S&P, NASDAQ, all in the red right now. Stocks wavering after Fed Chair Jay Powell reiterated his commitment to curb inflation and acknowledged the risk of recession as some traders now expect the central bank to closely monitor the impact of its rate hikes on the economy. So the S&P down 4 points now, down 0.1%, 12 minutes to go ahead of the closing bell. The Dow is down 37, a drop of 0.1%. The NASDAQ Composite Index down 30, down 0.3%. The NASDAQ 100 Index also down by 0.3%. Russell 2000 lower as well, down 0.3%, while the 10-year yield is at 3.14%. Spot gold higher by $5 now to $18.37, up 0.3%. Crude oil, West Texas Intermediate down $4 a barrel, 105.53, down 3.6%. Recapping a late day fade, S&P down 3 now, down 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
In agreeing to visit Saudi Arabia next month, President Joe Biden has stepped back from his vow to treat the country as a pariah. Critics have blasted him for overlooking Saudi human rights violations. Even so, Biden's trip can serve a valuable purpose. Healthy U.S.-Saudi ties are critical to calming a volatile part of the world and stabilizing global energy markets. When he meets with Crown Prince Mohammed bin Salman, Biden should make clear that improved relations require both nations to respect each other's core interests. For example, if the U.S. is to reaffirm its commitment to Saudi security, then Saudi leaders must pull back from their flirtation with the Russians and Chinese. Biden's trip should be seen not as a concession, but as an investment in a relationship that both states need to work. If Biden can restore that frayed understanding, his visit will have been worth it. This editorial was written by the Bloomberg Opinion Editorial Board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPN Go on the Bloomberg Terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, well, time flies when you're having fun. And look at that. We are less than 10 minutes away from the close of trading here when it comes to U.S. equity markets.
We are having fun.
You are having fun, Ed. I hope you
Yes.
are. Yeah, this is a fun program. We have a good time here at Bloomberg Business Week Radio. Hey, really eager to chat with our next guest, Samir Samana, Senior Global Market Strategist at Wells Fargo Investment Institute. Samir joining us on the phone from St. Louis. Samir, how are you?
I'm good. How are you?
Doing really well, thanks. I wanted to get your thoughts. I want to start with Jay Powell and the comments that we heard from him earlier today. Did anything change about how you're thinking about a 75 basis point increase at each of the next two policy meetings?
No, not really. I mean, it sounds like that's kind of the new 25, right? I mean, it was, 54 it was the new 25 for a while. Now it sounds like 75 is the new 25. And, honestly, a lot of it has to do with the fact that, you've got commodity markets and inflation just not playing nice in the sandbox with what the Fed's trying to do. I mean, we just had oil not that long ago back in the 120s. And, on a month-over-month basis, you had the possibility of, CPI accelerating once again. Now, today we're down to 105, so, some of the pressure is coming off the boil. But unless that continues, you're in a situation where the Fed's trying to get that number down to 2, and you're sitting in the 6s.
Samir, good afternoon from San Francisco. It's Ed Ludlow here. You followed the data, right? And you said current data trends suggest a mild recession by late 2022. Does anything that Fed Chair Powell said assuage that fear or change that course?
nothing Powell said changed that course, but we were kind of out of consensus when we first made that call a few weeks back, and now, unfortunately, I would say the outlook has gotten even cloudier, maybe even a little bit less rosy. So we're on the lookout to see if that shorter, milder recession has a possibility of becoming something even a little bit longer or deeper, and that's the risk with the Fed having kind of picked up the pace from 25 to 50 and now to 75 is by the time these rate hikes actually have their impact felt, it's going to be 6 months from now. It might be the early part of 2023, and at that point, even if they were to pivot, again you've got the same lag on the flip side.
Samir, to Ed's question, what are equity markets pricing in when it comes to recessionary fears? Like, if you do think that there is indeed going to be a mild recession by late 2022, is that what the equity market is telling us too, or is there further room to go down?
They probably are in the ballpark of a mild recession. I think the tricky part for equity markets is they rarely kind of stop at fair value. So they're probably in the ballpark of fair value for a mild short recession. But, as with almost all market cycles, especially when the Fed pulls the punch bowl away, you've got quantitative tightening where you've got maturities happening twice a month. You've got the next one coming up on June 30th. So I think that's the tricky part is, all right, if you're close to fair value, that doesn't give you a heck of a lot of upside from here into a mild recession, at least until recovery becomes a little bit clearer. So the question for a lot of risk takers in the near term becomes, kind of what's my upside? What's my reason for holding on to risk as opposed to, discussion being the better part of valor, moving to the sidelines, and then coming back sometime in the fall when I've got better clarity around the Fed's trajectory and the economic trajectory. And I think that's what you're seeing right now is in the near term, there's the risk of that type of overreaction to, look, it's just not worth it holding on, for the next few months.
Well, let's talk about risk and opportunities, Samir. I'm looking at the major indices, S&P 500, NASDAQ 100, both flat essentially, but swinging between gains and losses. And you learn the lesson, right, that you don't focus on a single intraday move. But where are the opportunities? What do you favor, particularly in the equities market, when you consider the factors you've outlined for us?
So I think right now you try to focus on wealth preservation and participation. And, the wealth preservation piece of it, we have pulled back our equity exposure, for much of this year. We pulled back on higher beta, more cyclical areas like small caps, emerging market equities. On the sector side, we've downgraded financials, industrials, discretionary, comm services, and we've kind of repositioned within larger and mid caps. We put some money back into fixed income. We actually lengthened duration recently. We've also, tried to get a little bit more defensive on the sector side, upgrading both utilities and staples recently. And then, so what that means is, it's not like we've crowded into bonds. We've gotten to a much more neutral position. And I think that gives us optionality heading into the second part of this year with respect to, all right, we're not too defensive so that if the market were to have a sharp snapback, we get caught on the wrong side of it. Or, vice versa, if there is a liquidity event, we're in a pretty good spot where we've got some excess liquidity via fixed income to be able to kind of redeploy it.
I'm wondering about your range here, because according to the great notes that you got, our producer Paul Brennan, you expect the S&P 500 down approximately 10% this year. You've got a 2022 SPS price target, midpoint range of 4,300, 4,600 by the year end. And here we are at almost halfway in, and we're down 21% on the S&P 500, Samir.
Yeah, so, to that range that we've got, it's a little over 10%. It would be kind of in those low to mid-teens, which is still doable. I mean, we were, at 4,150 literally weeks ago, so we were, almost knocking on the door of the lower end of the range. So I think if we, if the markets continue to kind of, price for a milder recession, if the economy continues to cooperate, if the Fed can get inflation under control, which, at least right now we're getting some relief from commodity prices, that number is very much doable. That being said, I would say the risk to earnings and the risk to that target probably is a little bit to the downside. And a lot of that can kind of be, steered back to, these 75, basis point hikes. I mean, that's, you're just throwing a lot at markets over a very short period of time. So, if we can somehow get inflation to calm down between now and the next meeting, I know Evans was out today talking about, it's possible that if the data evolves in the right way, 50 could be on the table for the next meeting. But the 75 base point hikes, those are just a very accelerated path. Now, again, that may end up being the base case, but I think that's what concerns us, and that's why the risks are probably tilted to the downside.
Right, Samir, we've got about a minute left, so very quickly, what about the things the Fed can't control out there? Supply side, supply chain, the war in Ukraine. How do you assess those risks?
They're probably at their peak with respect to being market drivers. It's hard to imagine a lot of those things getting worse from here. So the hope is, markets often work on reality versus expectation. So if the reality is just a little bit better in the second half, that could be another path towards the Fed possibly being able to ease up and us making us back to that target range.
All right, Samir Samana, Senior Global Market Strategist at Wells Fargo Investment Institute, joining us on the phone from St. Louis. Really appreciate you taking the time, Samir. Well, coming up, it is our countdown to the close. The S&P 500 is higher just fractionally by 0.1% right now, as is the Dow Jones Industrial Average. The NASDAQ also holding on to gains. You're listening to Bloomberg Radio. Coming up next, our countdown to the close with our friends at Bloomberg TV. This is Bloomberg Radio.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Taylor Riggs, Katie Greifeld in for Caroline Hyde. We're counting you down to the closing bell, and here to help take us beyond the bell. It's our global simulcast. We're joined right now by Tim Stenovic, Carol Masser. They're taking an extended Juneteenth holiday break. Ed Ludlow filling in for her today from his closet out there in San Francisco. We welcome our audiences across Bloomberg Television, radio, as well as on YouTube. But Market, Tim, I think that's really trying to digest not only the economic tea leaves, but I guess the more important question as to whether the worst of the economic conditions have been priced in.
Yeah, that is the big question here. And I think it's less about what we heard from Fed Chair Jay Powell today. Steve Matthews from our Atlanta Bureau making the good point that we didn't learn much new from the Fed Chair in his testimony to the Senate earlier today. However, talking to Samir Samana over at the Wells Fargo Investment Institute, he did say that equities right now are pricing in the ballpark of a mild recession. So we're seeing fair value for a mild short recession. The question is, though, does a mild or short recession turn into something that is bigger? What is the risk to the downside here? What do we see that's longer, perhaps, or deeper than a mild and short recession?
Well, and the other way of looking at it, right, this was the most explicit admission that a hard landing is possible. And in the balance of risks, he was saying that we have to control inflation. Controlling inflation is the target. And there was so much outside of Fed Powell's control. He was at pains to tell lawmakers, like, look at what's happening in Ukraine. Look at what's happening in supply chains around the world. The Fed can't do much about that. That is outside of their control.
One thing that is inside their control is the selling of that MBS portfolio. Sort of cued my ears, Romaine, when Powell said that we'll be transparent about selling the MBS portfolio when we all thought that it'd be maybe a passive roll-off.
Yeah, it's going to be interesting as the Fed gets deeper into quantitative tightening here on this Wednesday afternoon. Kind of a mixed bag. Again, we opened lower. We spent a good portion of the day higher, but wow, that we get those closing bells. Pretty much everything is in the red, with about half the stocks in the S&P higher, half lower. The S&P down by 0.1% on the day. Similar story for the Dow Jones Industrial Average, down by about 0.1%. Similar story for the NASDAQ Composite, down by about 0.1%. And the Russell 2000 falling by about 0.2%. And I do just want to point out real quickly, the Dow Transport's a little bit more of an indicator of some of the embrace of cyclicals. Not much of an embrace today. Transport's down 1% on the day.
When we look at what stocks moved higher and lower in the S&P 500, we're kind of break even here. 254 stocks in the S&P 500 advancing, Katie, 248 of those declining today.
And you see the same story if you look at the sector level, to borrow a term from Romaine, a mixed bag. Up at the top, you have household products, think Clorox, think Kimberly-Clark's. Real estate, too, catching a bid today. At the bottom, though, you have energy. That was losing all day. No surprise there. That sector with 4% losses. Materials, too, semis, food and staples, also in the red. But really, Ed, interesting to see this dispersion at the sector level as stocks dived into the close.
Yeah, some of the names I'm going to give you an eye on, for example, are some of the worst performers of the year. Look at Netflix, up almost 5%, had missed out on the recent rebound we've seen in equities, but news from the Wall Street Journal that Netflix is eyeing a tier of subscription that's ad-supported, said to be working with names like Google and Comcast. We saw a spike in that stock, but generally higher, and again, it's one of the worst performers of the year. We're also looking at Moderna, up almost 4.7%. The new trial of their Omicron variant vaccine appears in the initial stages to be effective against other variants of the COVID-19 virus. Of course, guys, we haven't been talking about that much recently, and we don't want to draw in too much causal relationship between a trial and share performance. We've learned that from Moderna, but that stock up. And DocuSign, also one of the best performers out there, one of the higher multiple software stocks that we kind of talk about out here in SF, gets caught up in the Fed narrative, but higher, top of the pile this very Wednesday.
All right, Ed, you have the gainers. I got the decliners here. Let's start with Altria. It's the tobacco company that makes and sells Marlboros here in the U.S., sinking the most in 2 years. Altria, you might remember, has a stake in Juul Labs, and earlier today, Dow Jones reported that the FDA is preparing to order Juul to take its cigarettes off of the U.S. market. It bought that stake, and excuse me, not cigarettes, but it's e-cigs, I guess you would call them, right? Vapes. Yeah, I mean, look.
They would argue they're very different.
They would, and look, I do wonder what it means for people who are trying to quit smoking and quit tobacco products, and if they do, go back to tobacco products. But there are a lot of places to get vapes. Finishing the day down by more than 9.2%.
Really, Tim? Can you expand on that?
Well, I don't know if you've ever been to a bodega here in New York.
Yeah,
Now and again.
I live in New York. So.
Yeah, I know. Okay, we also should
Tim's
know.
going to now educate us on the chopped cheese and everything else that New York has to offer.
Those are great. Altria bought a 35% stake in Juul. Back in 2018, it did that for $12.8 billion. Nike finished the day down by 3.5%. A couple of analyst notes. Seaport Global Securities cut its recommendation to neutral from buy. Telsey Advisory cut its price target to $140 from $170. Taylor, we're going to get Nike earnings next week and get some good visibility into the company. And then Coinbase. This is a really interesting story. You remember a few years ago, the race to the bottom with zero-fee equity trading. Is that about to start to happen when it comes to crypto? Well, Binance US, it's the American affiliate of the global crypto exchange Binance. It's the largest global crypto exchange, said earlier today that it was dropping its fees on trading for Bitcoin, and it's going to do that for other cryptos as well. We saw shares of Robinhood take a hit as a result, and look at this, Coinbase falling 9.7% as a result, because that's how Coinbase makes money.
Piggyback off of that, some Coinbase headlines, Tim, coming out. They're going to be ending Coinbase Pro and just have one advanced trading account. Our wonderful producers are saying that Coinbase Pro offers individuals the ability to trade a variety of these digital assets on that secure insurance-backed platform. So remain looking at least maybe one trading account now.
Yeah, and we should point out, just to Tim's point here, this also sort of affects fees, and in theory, I guess it would make it a little bit more cheaper for some retail investors out there with the new structure once that comes into play.
Quickly here, if I can, Tim, go to yields, or you want to do
You go to yields, Taylor, because I could talk about Coinbase forever.
Don't let me
You know,
miss
we just have to
yields.
put me out of my misery here.
Well, we'll just keep this short and sweet. I think what's interesting, we've been talking a lot about some of the volatility on the front end. Yields really falling at 15 basis points, back down to a 305 on the 2-year. But in the last 2 weeks, we've been between a 3 and a 350. So a lot of intraday volatility, but really sort of a long-term picture shows that that is sort of the range that we've been in. I'll just quickly mention the 20-year, Tim. You're at 348. Bonds caught a bid of about 10 basis points today, but this was the highest yielding 20s auction on record today. And you saw some buyers come in a little bit. I would just point out that this seemed to be sort of the first few times that correlations in that 60-40 came back into play with equities selling off, bonds were catching a little bit of a bid. And Tim, that hasn't always been the case as of late in sort of this big volatility era.
So hard landing or not, that is the question. And it seems to be more at this point that it's less news about who says we're going to have a recession, when that recession is going to be, and the probability of that recession, versus who's coming out right now and saying that there's not going to be a recession, because that's certainly the minority at this point, at least according
It's the minority,
to my
but there are still some prominent voices saying that. And just to go back to the hard landing thing, I was talking to John Authers a couple weeks ago. He actually wrote a great column about this back at the beginning of May, and he kind of said soft landing, hard landing is kind of immaterial, and he drew a comparison to sort of the miracle on the Hudson when Sully Sullenberger had to land that plane in the Hudson River. And I think I'd like the analogy because it gets to this idea that there really is no runway at this point. He's trying to land the plane, but he's trying to do it on something other than a tarmac. And I think that's the real issue right now.
I mean, it feels like even Powell has kind of given up the idea of a soft landing. I mean, he said today that it would be very challenging to pull off. And I mean, the Fed chair isn't going to forecast a recession. You're never going to hear that. But I mean, got pretty close today.
Most of the calls I'm hearing, though, is that if there is a recession, and of course, if that's inevitable, you're always eventually going to get one, it's going to be a mild one. And I've heard that from two different strategists today, that you can have a recession, but if it's mild and you sort of bounce back fairly quickly, then maybe the pain doesn't feel as bad as thinking about the last one in 2020 or the way that we had in 2008, for example.
Yeah, look, I go back to my main source of anxiety, Elon Musk. The question is not whether we have a recession. A recession is inevitable at some point. It's whether we have a recession in the near term and the depth of that recession. That is what our guests have been talking about all day. Samir just saying a light recession effectively in the second half of this year.
Can I just say that Elon Musk and Dudley kind of said the same thing, that a recession is inevitable. I think they used the same exact word.
Okay, but let's look no further than the jobs numbers and what we've gotten each and every month. Steve Matthews, again, from our Atlanta Bureau, making this point on our air. 400,000 to 500,000 jobs added to the U.S. economy every single month. And look, those are backward looking, of course. Yeah. But it's hard to sort of think about a recession, I think, when you're seeing unemployment here in the U.S. below 4%. And as Fed Chair Powell reminded us today, 2 jobs available for every 1 person out there.
Yeah, and I mean, it's a good point that Steve made. I actually heard that interview. It's a great point. I'll sort of counter that with the idea, though, too, is that doesn't necessarily take into account the lagged effects of what we're seeing out of the Fed. And I think, to sort of quote Larry Summers, I mean, this is kind of, I think, his concern right now, that when you sort of have tightening policy that has to push that unemployment rate higher, there really is no historical precedent that shows us coming off of a sub 3% base up to whatever it's going to be, 3, 4, 5%, and not have a recession accompanying it.
And not to be the cold water, but 2 job openings for every person available. Do we, again, Tim, really believe those job openings? Are those job openings in companies are being a little bit more selective on if it really is something that they're going to hire for? Or is it more just a little bit of an advertisement and they'll hire if they want down the road?
Was it the mortgage department, right? Earlier today, JP Morgan. 1,000 employees laid off or reassigned. I wonder if we're going to start to see that from other big banks. And proactively, are they actually going to, go take the jobs that are available? That is going to do it for our cross-platform coverage this afternoon. Ed did
a great job, by the way.
He did. We'll invite him back. Okay, he's allowed back. We love having Ed Ludlow here. Thanks to our TV team, and thanks for watching us on Bloomberg TV, listening on the radio, and watching us on YouTube. We're back here tomorrow at the same time and same place.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Ed Ludlow. Ed is live in our 960 studio in San Francisco. I'm here in the Bloomberg Interactive Brokers studios in New York City. Just to recap right now, the S&P 500 finishing the day down just fractionally, as did the NASDAQ, and the Dow Jones Industrial Average down just over 0.1%. To Washington, D.C. we go for a check the latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. President Biden is taking action in hopes of relieving Americans' pain at the pump.
Today, I'm calling on Congress to suspend the federal gas tax for the next 90 days through the busy summer season, busy travel season.
The federal gas tax is a little over 18 cents per gallon. Senate Republican leader Mitch McConnell calls the idea of a gas tax holiday an ineffective stunt. Well, the Senate is moving to advance a gun safety bill aimed at making gun regulations stronger. Senate Majority Leader Chuck Schumer commended his colleagues on the Senate floor today. 14 Republicans voted to move the bill forward.
I am pleased Congress is on the path to take meaningful action to address gun violence for the first time in nearly 30 years. The bill is real progress. It will save lives. And it is my intention to make sure the Senate passes this bill before the end of the week.
Schumer says there is momentum behind the bill that calls for expanding background checks for those under the age of 21, more money for community mental health programs, and tougher penalties for straw purchasing and illegal gun traffickers. Visitors are returning to a changed landscape in Yellowstone National Park as it partially reopens. It was shut down June 13th following record floods that reshaped the park's rivers and canyons, wiped out numerous roads, and left some of the areas famous for wildlife viewing inaccessible, possibly for months to come. Park managers raised the gates today at 3 of Yellowstone's 5 entrances. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenivek in New York City. Ed Ludlow live in our Bloomberg 960 studio in Washington. Excuse me. No, Nancy's in Washington. Ed is in San Francisco. We are all over. Ed, I don't know what rent is doing out there in San Francisco, but here in New York City, it's a couple years after the city was declared dead. Here, though, the city is alive and well, and we know that because we can look no further than the real estate industry. New Yorkers in more than 1 million stabilized apartments faced the largest rent increase in nearly a decade, this after a panel approved a 3.25% hike for 1-year leases and a 5% rise for 2-year leases. I think we're still having some problems with Ed's audio, unfortunately, so our folks in the control room are going to get that set. I guess, Ed, there's something when it comes to us going on TV and then coming back to the radio where the wires get crossed, but they're going to uncross those. And in the meantime, I'm going to talk a little more about what's happening with real estate here in the what's happening with real estate here in New York. This was a Tuesday night decision by the 9-member Rent Guidelines Board of mayoral appointees, and it reflects the political promises of Mayor Eric Adams, a landlord himself who has signaled strong support for small businesses and property owners, many of whom are facing mounting operating costs under soaring inflation. Under former Mayor Bill de Blasio, the board kept rates at historic lows, voting for rent freezes in 4 of the past 8 years. Well, most current board members are Adams appointees. Some have carried over from his predecessors. More than 2 million New Yorkers, or as many as 1 in 3 people who live in the city, stand to be affected by this decision. These hikes, we should note, they're the largest since 2013, but they're still significantly smaller than those in market rate apartments, where the median rent increased 29.8% compared with a year earlier as of May. This is according to a report by the real estate brokerage firm Doug Elliman. The changes will take effect on leases that begin October 1st and September 20th, 2023. You're listening to Bloomberg Radio, Bloomberg Business Week. Tim Stenivek live from the Bloomberg Interactive Brokers Studio. Ed Ludlow from the 960 studios in San Francisco on Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Shares of KB Home higher after hours, after earnings. KB Home's second quarter EPS came in at $2.32. Estimates were for $2.02. A revenue beat as well, $1.72 billion on KB Home. Estimates were for $1.65 billion after hours. KB Home shares up now by about 3.9%. Late day fade. The S&P, the Dow, NASDAQ spent much of the session in the green, but stocks slumped after Fed Chair Jay Powell reiterated his comment to curb inflation and acknowledged the risk of a recession. Those losses coming in the final hour of trading. S&P down 5, a drop of 0.1%. The Dow down 47, down 0.1%. NASDAQ down 16, a drop also of 0.1%. 10-year up 31/32. 10-year yield 3.15%. Spot gold up 0.3%. 18.38 the ounce. West Texas Intermediate crude down 3.9%, 105.27 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, a study released back in March, it was for Equal Pay Day, had some really startling findings. After years of narrowing, the pay gap for women in the U.S., which accounts for average pay across industries and occupations, it held steady at 82 cents for every dollar a man makes over the past 2 years. So for every dollar a man made over the last 2 years, women were paid 82 cents. This according to PayScale's 2022 State of the Gender Pay Gap report. So the pandemic really held back women when it came to narrowing that pay gap, stalling since the start of the COVID-19 outbreak. I want to get into this with Tracy Bell, Director of Equity Strategies at First Horizon Bank. Tracy has been in the investment management industry for more than 20 years, doing portfolio management, research, trading, and more. Tracy, how are you?
I am good. Thanks for having me.
Well, I want to specifically talk about the Women and Wealth Initiative. Is it designed to help alleviate issues like the gender pay gap here in the U.S.?
It is. You know, part of what we focus on is education for women when it comes to financial planning and making sure they're involved in understanding what are the best decisions that they need to make for themselves when it comes to finances. You know, you mentioned just a few minutes ago that the recession disproportionately affected women. And, you know, absolutely, when we had the 08-09 recession, that disproportionately affected men. But this time around, it had a much bigger impact on women. Health and human services, education, women make up a lot of the employees within those areas, and those lost a lot of employment. So even though those areas have recovered now that we've reopened past the pandemic, women found themselves losing more time employed as compared to men.
What about...
And they had greater... Go ahead.
What about, Tracy, just the fact that women live longer than men and need to plan for that? Here's something that's really interesting. On Friday, my grandma, who turns 100 this year, where she lives in this community, they have a party for everyone who's turning 100 or over the age of 100. 12 people were there. 10 of them were women. 2 of them were men.
Right. Right. Yeah. So that is one of the factors that we talk about a lot with women. There are several that go into that equation. You know, when you're talking about your life and the financial aspect of it, math is a big part of this equation. And for women, there's several components of that that can be challenging. So again, the statistics you cited earlier, women tend to earn less income over their lifetime than men. Whether it is earning lower income or whether it's taking a break in your career for childcare or elder care, you're going to have lower lifetime earnings in many of those instances. And then on top of that, women tend to live longer than men. You know, to have 10 of those people that are turning 100 be women out of the 12, that speaks to the longevity that women experience. And then because women tend to be a little bit more conservative in their investing, even though they need to invest a little bit more aggressively, maybe they're investing too conservatively. And part of what we talk to women about is being sure that you're investing appropriately for the long time horizon out in front of you, and you know where you are, where you need to go, and how you're going to get there.
What about when it comes to just women in finance, and to what extent we've actually seen that become, I mean, we're not even close to gender parity. Just look at Jane Fraser at Citigroup. Last year, she became the first female chief executive of a major U.S. bank, and she's still the only female chief executive of a major U.S. bank. But even below the CEO level, it's still overwhelmingly dominated by men. How do we fix that?
It is. And, you know, it's part of it is taking time. And part of it is also advocating and making sure that we have the right kind of inclusion efforts in place. So when I speak to young women that are interested in finance and young women that are in finance, I tell them a couple of things. You've got to be persistent. You've got to be curious. You've got to be clear about what you want and connect with those people that can help you get there. You know, it can be difficult at times for sometimes for women to be heard within this industry. So you've got to keep speaking up, and you've got to keep speaking up to the right people. That is incredibly important. Know how to advocate for yourself, and know how to find advocates within your organization that will help you on your career path. But it is challenging. You know, a lot of the social activities within the financial industry are traditionally men-dominated activities, and we as women have to be involved in that and have to be sure that we're standing up for and advocating for ourselves in our career.
Well, Tracy, I mentioned that you've been doing this for more than 20 years, and I'm wondering how you've seen it change during your career. And, you know, we say 20 years, and it sounds like a long time, but it's if we go 20 years ago, we're in 2002. So, you know, I'm just curious how things have changed during your career.
Yeah, have you had that experience where you're here 20 years ago and you think it's 1990, but it's not? It's
I'm having that experience right now when I'm doing the math. Absolutely.
Right, exactly. You know, I think there is much more recognition these days within the financial industry that women have some really unique qualities when it comes to working with clients and working in this industry. There's a lot of studies out there. Women are great with relationships and relationship building. That tends to work really well when you're client-facing and working with clients. And then there are other studies out there that show that women have some aspects about their personalities that make them very good investors. They tend to be a little more patient. They tend to be a little more long-term oriented. And I think those things have been recognized. And we tend to do a really good job explaining the complex sometimes. So those are factors that are actually very helpful to us in our careers in finance.
Tracy Bell, Director of Equity Strategies at First Horizon Bank. Tracy, thank you so much for taking the time and joining us on Bloomberg Business Week. Tracy joining us on the phone from Birmingham, Alabama. You're listening to Bloomberg Radio. Tim Stenevec here in New York. We're getting Ed Ludlow in San Francisco back up on the line in just a few minutes. And you're listening to Bloomberg Business Week on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenovec live in the Interactive Broker Studio in New York. Ed Ludlow joining from the Bloomberg 960 studio in San Francisco. In just a couple of minutes, we are going to talk venture capital. We said that we're spending the last portion of our show dedicated to equality. We just heard from Tracy Bell over at First Horizon Bank, who spoke to us all about their Women in Wealth initiative. And then we're going to speak to some venture capital. And when it comes to gender equity, it's not so good. We're going to speak to Joanne Corcoran, the co-CEO of Golden Seeds, in just a few minutes. First, though, Charlie Pellet, give us an update on everything that's happening after hours.
Earnings, and let's begin with KB Home. It did report earnings per share for the second quarter that beat the average analyst estimate. KB after hours advancing now by about 3.1%. Turned out to be a down day on Wall Street. Final hour of trading is when things fell apart for the bulls. The Dow, the S&P, NASDAQ, all ending in the red today. 5-point loss for the S&P, down by about 0.1%. Fed Chair Jay Powell today reiterating his commitment to curb inflation and acknowledged the risk of a recession, even as some traders now expect the central bank to closely monitor the impact of its rate hikes on the economy. The Dow down 47, down 0.1%. NASDAQ down 16, also a drop today of 0.1%. 10-year yield 3.15%. Spot gold up 0.2% to 1837. Bitcoin though down 4.2%. Back below 20,000 as I speak at 19,959. West Texas Intermediate crude oil today down 4.4%, 104.72 a barrel. Well, as for the market backdrop and the Federal Reserve, Samir Samana is Senior Global Market Strategist at Wells Fargo Investment Institute. He was our guest right here on Bloomberg Business Week.
The question for a lot of risk takers in the near term becomes, kind of what's my upside? What's my reason for holding on to risk as opposed to, discussion being the better part of valor, moving to the sidelines, and then coming back sometime in the fall when I've got better clarity around the Fed's trajectory and the economic trajectory. And I think that's what you're seeing right now is in the near term, there's the risk of that type of overreaction to, look, it's just not worth it holding on, for the next few months.
JP Morgan Chase is laying off hundreds of home lending employees and reassigning hundreds more this week as rapidly rising mortgage rates drive down demand in what had been a red-hot housing market. JP Morgan Chase down 0.5%. Recapping 10-year yield 3.15%. S&P down 5, a drop of 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, as I mentioned before, when it comes to gender equity in the venture capital space, it's not good. Check this out. Female founders secured only 2% of venture capital in the U.S. in 2021. It was the smallest share since 2016, and a sign that efforts to diversify the famously male-dominated industry are struggling. In fact, Ed, 2021 was the second year in a row that women's percentage of VC funding shrank. This according to a report in January by the research firm PitchBook. Joanne Corcoran is co-CEO at Golden Seeds. She's also general partner of Golden Seeds Venture Fund. Golden Seeds calls itself the largest angel network in the U.S. that invests in early-stage women-led companies. Joanne Corcoran joining us on the phone from Copenhagen, Denmark. Joanne, how are you?
I'm good, thank you. Late here.
Yeah, it's late there. Well, what are you doing? I mean, I know that Golden Seeds is based here in New York. Are you guys opening up an arm in Copenhagen?
I don't know if we're going to do that, but I happen to be on vacation.
Okay. Well, thanks for taking time from your vacation to join us.
Yeah.
We are really excited that you're joining us here. Hey, I want to talk about gender equity in the space, but before we do that, since you do have so much experience when it comes to VC, I just want to get an update from you about the market right now, because we've certainly seen IPOs dry up over the last couple of months with the volatility that we've seen. What are you hearing from LPs? What are you hearing from portfolio companies right now?
Well, our working hypothesis is that the private markets follow the public markets. We saw it in 2007 and 8. And if you go back and look at 99, 2000, it was the same thing. So it's been a wild ride the last 2 years. Things sort of ground to a halt in the first quarter of 2020. But then with stimulus, it just picked right back up, and prices in the private market just kept on escalating along with the public markets. And then you get to this year, and I just heard you guys talking about it, the public markets are down, at least 20%. And we're starting to feel it in the private markets as well. Where the most price inflation was in later stage stuff, so that's where we're seeing the most pressure right now. But even in the earliest stage stuff where our investors typically start investing, that was up about 20-25% over the course of 2021, and we'll start to see that flatten out.
I'm sorry to cut you off, Joanne. It's Ed Ludlow here in San Francisco. And I've been so excited to talk to you. I mean, I'm hearing a lot of the same things in the conversations I'm having in the world of venture capital. I just wonder, I want to get to women-led companies, women founders, but what I'm hearing is that now is kind of the time to batten down the hatches. Does this present an opportunity for you to go out there and deploy capital with the best women-founded startups, the best women-led companies? Because my understanding is that, there is a little bit of a pullback in that capital allocation in the world of venture.
I would say that, it's a tough slog for women to get funded all the time. But because it's always been a tough slog, perhaps for women it won't be such a big switch.
Why is that? What are the factors that make it so tough?
My personal opinion, and there's lots of data to back this up, that a lot of it is implicit bias. When, like our investors, we typically start out investing in the seed stage round, right? So this is generally when companies are pretty new. They don't have a lot of metrics. They are essentially talking about what they plan to do. And when women are pitching, they get asked a lot more risk kind of questions. And men pitching a similar idea get asked a lot more questions about the opportunity. And I do want to say, there's lots of studies that show this. It's not just male investors who ask those risk questions. Wow. It's all investors, including women. And one of the things that we do at Golden Seeds is we try to be very conscious of how we are talking to entrepreneurs, that we are, looking at potential as much as we are at risk, no matter who is speaking, men or women.
Joanne Corcoran, co-CEO of Golden Seeds. Joanne, sit with us, even though it's 10:39 p.m. in Copenhagen, Denmark, because we're going to do some news, and then we are going to come back. We got a good chunk of time on the other side to talk more about what you're up to as co-CEO of Golden Seeds and general partner of Golden Seeds Venture Fund. For now, though, to Washington, D.C. we go for a check of the latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. President Biden is looking to Congress to help ease the financial burden posed by rising gas prices. He wants a 3-month gas tax holiday.
What I'm proposing is suspending the federal gas tax without affecting the Highway Trust Fund. And here's how we do that. With the tax revenues up this year and our deficit down over $1.6 trillion this year alone, we'll still be able to fix our highways and bring down prices of gas. We can do both at the same time.
Biden also wants states to suspend their local gas taxes. He's also calling on oil companies to increase their refining. Fed Chairman Jay Powell today assured the Senate Banking Committee that the Federal Reserve Board is determined to bring down inflation and has the tools to do it. Bloomberg's Irv Chapman reports.
The Fed's policy course was questioned by Senator Elizabeth Warren.
Chair Powell, will gas prices go down as a result of your interest rate increase?
I would not think so, no.
Will the Fed's interest rate increases bring food prices down?
I wouldn't say so, no.
Rate increases make it more likely that companies will fire people. You could actually tip this economy into recession.
Powell said the goal is to bring overall demand back in line with constricted supply, and the Fed will make rate decisions based on the evidence at each meeting. In Washington, Irv Chapman, Bloomberg Radio.
The January 6th House Committee may schedule additional public hearings next month. Committee Chairman Benny Thompson says they may be necessary due to significant new evidence that's emerged. Another hearing is on tap for tomorrow. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenevec in the Bloomberg Interactive Brokers studio in New York. Ed Ludlow in the Bloomberg 960 studio in San Francisco. Ed, this is a California company. We're talking about Cliff Bar here. You a big Cliff Bar guy?
You know, I was. I am cutting down on snacks because, shameless plug, I'm getting married in August, so I'm on the wedding diet. But I have in the past been a Cliff Bar guy.
Well, it was a privately held company for years. And then over the weekend, believe it was on Monday that we heard Mondelez International was buying the company for $2.9 billion.
Yeah.
It wasn't the first time, though, that the husband and wife team, Kit Crawford and Gary Erickson, had gotten an offer to buy the company.
No. So Quaker Oats came in 2000, which is crazy. Like, Cliff Bar been around since 2000. Like, I don't remember Cliff Bar.
You were
back
just
in
a
2000.
young.
But anyway,
you were just a young man in 2000.
I was a child.
Right?
But Quaker Oats came in for 120 million, and I love this story because out here in San Francisco, Silicon Valley, these are California people. What's self-restraint to turn down 120 million, and then, taking into account for inflation, some 22 years later, 2.9 billion. Wow.
2,400% gain. And then when they rebuffed that early buyout, when they walked away in 2000, Gary Erickson and Kit Crawford wrote on the company's website, Cliff is not for sale. And, well, something changed in recent years when they walked away, since they walked away from that sale. So, Ed, okay, let's talk about how much money they're going to get here. So a few years ago, about a decade ago, they gave 20% of their shares to workers as a retirement benefit. They retained the remaining 80%, so their combined stake would be worth about $2.3 billion before taxes, though after those high California state capital gains and federal taxes too, it would reduce their windfall to about $1.55 billion.
But I shan't shed a tear for them.
The family also operates White Road Investments. It's a sustainable venture capital firm and an organic winery and farm in California's Napa Valley. Check this story out at Bloomberg.com. I tweeted it out and on the Bloomberg terminal.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Turned out to be a down day with the S&P snapping a two-day rally. Those losses coming in the final few minutes of trading. The Dow, the S&P, and NASDAQ all down by 0.1%. The S&P fell 4 points. The Dow dropped 47. NASDAQ down 16. 10-year yield 3.15%. Stocks slumped today after Fed Chair Jay Powell reiterated his commitment to curb inflation and acknowledged the risk of recession, even as some traders now expect the central bank to closely monitor the impact of its rate hikes on the economy. Spot gold up $4.92 the ounce to $18.37, up 0.3%. West Texas Intermediate crude down 4.7%, $104.35 a barrel. Bitcoin below $20,000 now, $19,840. Bitcoin today down by 4.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. I want to get right back to our last guest, Joanne Corcoran, co-CEO of Golden Seeds, general partner of Golden Seeds Venture Fund. The firm based here in New York. Joanne, this evening, joining us live on the phone from Copenhagen, Denmark. Ed Ludlow in San Francisco. Ed, I know that you have some questions for Joanne.
Yeah, I mean, I just find this fascinating. We have this conversation so often about the lack of funding, not funding that's available. Funding is available, but funding that goes to women-led startups. And I have this conversation with CEOs all the time that diversity of thought yields a better conversation, a better product, a better startup. So Joanne, that's my first question to you. You know, across your portfolio companies, what successes are you seeing when you do back women founders and women leaders at these companies?
Well, if you look at 2021, we had an absolutely great year. We had more than 10 acquisitions and IPOs, and in that one single 12-month period, we returned more than 50% of all the money that our investors and funds have ever invested since the start of Golden Seed 17 years ago. So, you know, it's hard for us to be statistically significant. We invested, you know, $165 million in vast preponderance of that in 143 companies. So we're not exactly, I can't say that much about.
Well, hold on. That's a respectable early stage fund. You know, that's sizable money in the early and seed stage. So I respect that.
Oh,
I mean,
yes, yes, for sure. And,
I was reading across your blog as well today on the Golden Seeds website, Joanne, real quick. And, you know, there's a lot of examples where the companies you're investing in also serve a function that helps women globally. Are there any examples that you can talk to us about that?
Well, helping women globally, I mean, I would say helping the world globally. I mean, we're invested in a company called Cadenza Innovation, which is unbelievably amazing battery technology that stops thermal runaway. It is a technology to make batteries safe so that you can store energy off the grid and that, you know, you can use renewable energy at any time. So that's a serial entrepreneur who came to us. She's founded the 5th largest battery company in the world. It's now Chinese owned, and she has come up with this new idea about 7 or 8 years ago. And you'll be hearing a lot about it because it is technology that's going to help us get to carbon neutral.
How would you characterize the types of companies that are pitching you right now, and perhaps how that's changed in recent years? If you think about the problems that the world is facing now, they're certainly different than the problems that the world was facing 5-10 years ago. I'm wondering what you're seeing right now with those potential portfolio companies.
You know, women get about 35% of the STEM degrees, maybe a little bit more of that than that in the U.S. And most of those are in bio and life science and in material and, you know, like chemical engineering, not so much in computer science. So we do fund a lot of software, but we also fund a lot of medical devices, diagnostics, and biotech. and advanced material. And we also do fund on occasion a few, consumer products, but that's, I would say, only about 10 to 15% of what our members and funds invest in. So advanced materials seems to be the place where we're seeing some of the most exciting things right now. In particular, we're seeing people have come up with polymers so they can do industrial 3D printing.
Wow.
And that's going to change the way we put together production lines. When you don't need a gigantic production line to make industrial parts. You can do it in smaller quantities with 3D printing. So that's really exciting. We have another couple of companies that are working in the chip manufacturing. We have a company in New Jersey that's making conductive adhesive so that you can have flexible electronics. And that's really exciting to material science engineers.
Joanne, could I ask
like
you?
That.
Could I just ask you, for prospective LPs out there, potential backers of your venture fund, what is your pitch to them about why you want to be investing in women-led companies, women-led startups?
Well, there's a couple of reasons. Fairness is one reason. And frankly, if you're not investing in diversity, you are ignoring all the science and the data that's telling you that diversity pretty much makes everything better. So, and also, sadly, women have a harder time getting funded. So typically, you can buy into these deals at the earliest stage at a cheaper price.
Joanne, to jump on to Ed's question there, again, what you're hearing from LPs right now, in this environment, are you hearing them is it tougher to raise money, given that we're seeing so much volatility and some of these LPs are now sitting on losses for the year, at least when it comes to their equity portfolios?
We're not having a lot of, our investors have not pulled back yet. Now, can't say for sure that if the markets continue to go to decline or we have a recession that we're not going to see them pull back, but we haven't seen that yet. And the one thing I would say about women-founded startups is, necessity is the mother of invention. And typically, BCG did this big study a few years ago that women who do get funded typically get about half the amount of funding that all male founders get. And yet, if you look out a few years, they've generated more than twice as much revenue for every dollar
Joanne,
of funding that they got.
Yeah, it's remarkable. We only have 30 seconds left. I just want to get your outlook for the next decade. To what extent does this get better, where we start to see actual parity when it comes to venture going to female-led companies?
I think that the way to get parity is to have more women actually pulling the trigger on the investments.
Right.
And, that's going to take a while. But we know if you look at the early stage angel markets, 20 years ago, 5% of investors were women. Now that's 30 and 40%.
Okay.
And 30 to 40% of the angel money goes to female founders.
Still a long way to go. Joanne Corcoran, co-CEO of Golden Seeds, general partner of Golden Seeds Venture Fund, joining us on the phone from Copenhagen, Denmark. This is Bloomberg.